Welcome back, traders and investors. We have Dave Landry on the phone, trader and founder at DaveLandry.com. Dave, how you doing this morning?
Doing great, Joel. Thanks for having me back.
Yeah, now you're going to have to bring a lot of energy here. We just had Fari Hamzy on before, and he was on a roll. So we're going to get you going as well. We're going to get you first, just get your thoughts here on this overall market. I'm calling it the Hills and Wrath rally from yesterday, predicting that the Fed was going to stand tight on interest rates. Were you able to position yourself ahead of that rally or not?
Well, I don't try to focus on the micro. I think you could end up chasing your own tail and doing that. I had positions on going into the rally, and some worked and some didn't. But I think you could get too obsessed if you're watching the news and you're trying to figure out every zig and zag. I'd rather just position myself and ride out the bumps.
Okay, so now looking, we're right back at all-time highs, Dave. Just like that.
The P's are the S&P 500 is just off of all-time highs, so that's a good thing. As a trend follower, I'm certainly not going to fight it, but I do pay attention to everything that's going on, and there's been a few issues here and there, and one of which has been bonds lately, as you know, have been sliding pretty hard as of late.
And let's take a look at the TLT here. I mean, this is just old. I mean, if you looked at this chart, you would think interest rates were going up.
Yeah, it's not. I'm not worried about the absolute rates. I mean, what is it, 0.00 or whatever it is?
Yep.
They're non-existent. What's concerning though is when the market has a big delta like this or change in rates, big change, and I think that's going to be important. A lot of people may be forced to do some things, and it's the fear of the higher rates that's the problem, and not the rates in and of themselves. So we're going to have to keep an eye on that situation. Obviously, it's put. It's put the top in, so far at least, looks like on real estate. As you know, real estate got hit fairly hard last week. Energies are getting hit hard, too. I don't know if that's interest rate related or not. But, again, we can't argue with the fact that the market's hovering around these all-time highs, so we don't want to get too bearish just because rates have gone up a little bit.
With the real estate, is there any particular REITs that you follow, or is there a real estate index that you like to keep an eye on?
I keep an eye on. I use the Morningstar industry groups for a proxy for real estate, and just look at the individual stocks as far as maybe some shorting opportunities will arrive there soon. I'm not a big fan of trading them because they're lower in volatility, but when they begin to roll over, like we saw last week, they can actually make a pretty decent move. So they're on the radar as a possible shorting area.
What could you give me one of those symbols? One that was under a little bit of pressure.
Sure, SRC, and I don't even know what I'd have to punch it up myself to tell you the company name.
Yeah, SRC.
I look at symbols. Spirit Realty Capital.
Yeah. Now, when you short those things too, I mean, a lot of these pay huge dividends, right? So So you gotta factor that into your cost if you're caught in between the period where it's holding a dividend. But that chart does not look real good. Let's talk about energy, and holy mackerel, crude has just been all over the map lately. Got down into the lower 90s a couple times, I believe, this week or starting in last week. Now we're back up at 94. When you trade crude, do you trade the futures or do you trade the USO, or you just it's just an instrument you just kind of keep an eye on?
I usually avoid, even though I was a commodity trading advisor for 14 years, I actually would prefer to trade the stocks as opposed to the underlying commodities. Commodities can be very efficient, can be a very crowded playing field. So if I'm looking at the gold stocks, I'd rather trade, or looking at gold, I should say, I'd rather trade the gold stocks than the underlying commodity. And if you look at USO, you can see it's kind of all over the place, so that's kind of difficult to trade. But if you look at some of these energy stocks, which have been in some really good uptrends, they're now beginning to roll over. So I think we could be in the early phases of some possible new trends developing there, unfortunately to the downside. But as a trader, I shouldn't care whether it's up or down. But again, it looks like some of these energy stocks, individual issues, could provide some opportunities really soon.
I mean, you look at ExxonMobil, for example. I mean, that stock is way off its all-time high and had a big drop down to the $98 to $100 level consolidation, and now it looks like it's trying to do another like 96 to 98 consolidation. You're looking for another consolidation and then another move to the downside in the second biggest component in the S&P 500 index.
Well, I think the problem with ExxonMobil is it does chop around a lot, but it does. I agree with you. Well, I don't know if you're saying it's rolling over, but it does look like it's kind of rolling over in here. The problem with that is you're not going to make a whole lot of money trading something like ExxonMobil because if it does begin to break, it's going to probably go down to about $90 a share and just bounce around there because it consolidated for an entire year, meaning it went sideways at that level. I'd like to find something a little bit more obscure that it's in the early phases of rolling over, like Whiting Petroleum, for instance, WLL. It recently cracked from all-time highs, and now it's pulling back a little bit. And it could be an early phase of rolling over. The only problem with trading a stock when it's just beginning to roll over is like the American pioneers, you're a bit of a pioneer, and you're either going to get the gold or you're going to get the arrows in your back.
What about the ConocoPhillips here? That one has seemed to have held up a little bit better. Now you have this huge consolidation period now near the top of the range. I mean, I guess this one, if you're trading it from the short side here, you got a pretty well-defined out above these recent highs.
Yeah, it's not exactly set up for rolling over, but it does. I agree with you. It does look like it's in a lot of trouble. And I like what you said, Joel, about you got a pretty well-defined out. Sometimes getting into a trade, sometimes knowing where you're going to get out if you're wrong is just as important as getting into the trade in and of itself. And if it goes on to make new highs, then your risks are fairly well-defined. As a trend follower trying to catch a new trend, you realize that old trend might still be in place, and you lick your wounds and you move on. He who fights and runs away lives to fight another day.
Now we're about a week removed from all the action in Apple with the announcements of the new products. It's been just all over the place. Any thoughts on Apple?
Yeah, that could be a really tough one to trade. It's just all over the place. I agree with you on that. I would avoid it for now. I'd prefer to find something maybe a little bit less obscure, but it's been chopping around. And if you look at the charts, it's going up and down quite a bit, but it really hasn't moved on a net basis a whole lot since about 2 months in here. So that's hard to trade something that's going to be that wide and loose.
What about the Momos? Do you like to trade any of the momentum stocks? We had a wild day in Tesla yesterday. I know you don't pay much attention to upgrades and downgrades in the analysts, but holy smokes, on Monday, Adam Jonas got the ball rolling to the downside in Tesla. Is that something you participate in at all?
I do like the momentum stocks a lot, but something like Tesla right now looks like it's beginning to kind of roll over in here, so that might actually come up on the radar as a shorting opportunity. Ideally, I want to find a smaller cap company, maybe a biotech or something, or even an IPO, something that's trending nicely and look to get aboard in a pullback. Something like Tesla that's been around for a long time and it's just coming off of all-time highs. It's up about 1,000%, maybe more since 2012. That maybe it has ran its course, so I'm not as excited about something like that. Ideally, I want to catch that momentum stock like Tesla 3 years ago. So that's the ultimate goal. It doesn't always happen, but that's what our aim is.
Okay, and so do you have any stocks like that are, forming a base or, because I know with the market up at all-time highs here, it's hard to find value in the market. Can you give us any example of some stocks that, maybe forming a base or you're finding some value in long-term?
Well, right now I think there's not a whole lot of value in that. A lot of these stocks have already ran up quite a bit. I'm not seeing a whole lot of setups just yet on the long side for this particular cycle. If the market breaks out, then on pullbacks I'll find a few. But yes, I'm not gonna be as excited about something that's already ran up 1,000%. I'm gonna try to find something that hasn't run up as much. I think right now at this particular point in time, the big opportunity could be in shorting some of these energy stocks because it looks like they're done for now. But I think as far as I wouldn't fight the overall market though and rush out and short a lot of other stocks. I think wait to see if the S&Ps can follow through, if the Nasdaq can follow through, and ideally the Russell too. And then on pullbacks, I think there could be some new opportunities.
And what about like a stock like X? You following the movement in that today at all? Something like that? You might hop in for a day trade, or is it just way too much news on that thing for you to get involved?
You talking about this U.S. steel?
Yeah.
Well, I will follow along like the Chinese steel stocks, Chinese aluminum stocks. I've been keeping an eye on those guys because they've been in some pretty good trends. Something like X is running into, believe it or not, resistance from several years back. So I'd be less inclined to be excited about that. I'd rather catch something commodity related like this. I'd rather catch it coming off of a major multi-year low, but beginning to trend off of that low, as opposed to something like right now with U.S. Steel. It's running into some resistance around 45 or so. So it's just above where we are now. So I would be less excited about that and more excited about something that would be in the earlier phases of a developing trend when it comes to something like a commodity.
So is it something that you might try and short for a day trade, or maybe use?
No, I really don't. I really don't day trade that much. I think you can only predict the short term when it comes to markets, and so when I see a market in a strong trend that has begun to pull back, I'm looking to get in for a swing trade back to the old highs or so, because I think that's as far as you can look out when it comes to the markets. Because as I often say in my disclaimer, all predictions are about the future, and a lot of stuff can happen between now and then. But if I'm able to get that swing trade out, then I'll stay with the position, taking partial profits along the way as long as it moves in my favor. I think you have to be careful day trading. Nothing against the day traders, but if you're not careful, like I said earlier, I think you can end up chasing your own tail. Each little zig and zag becomes something much bigger than it really is.
Do you make use of options at all?
Occasionally I use options. On the short side, in-the-money puts I think are a good thing to do as opposed to outright shorting. You mentioned earlier some problems with shorting, such as dividends, and that's you tend to avoid those kind of problems if you're using an in-the-money option. So I'll look at in-the-money options on the short side and occasionally on the long side too. For the most part, though, I like trading the underlying security.
Okay, and boy, did you notice the relative strength in the financials last week? One of our customers in the chat room, Pete A, had picked up a buyer in J.P. Morgan in the pre-market, and even though the market declined last week, they showed a lot of relative strength. Goldman Sachs trading at levels it hasn't seen in about 3 or 4 years. Are there any financials that are catching your attention?
Yeah, I mean that's interesting. You brought that up because it's like I manage momentum list, and the big financials is showing up in that list, and I think that's a good thing. You take a look at the XLF in and of itself, which is the S&P sector.
Yep.
For financials. And it closed at all-time highs just yesterday. So I think you're on to something there. I think that's a good sign for the overall market. I'm not as excited about the big, thick Morgan Stanleys and Goldman Sachs and things like that to trade those because they tend to be more efficient stocks. I'd rather something a little bit smaller cap, but I think that's definitely a positive. We got a few negatives in this market, such as interest rates and those interest rate-sensitive areas. But for the most part, market's kind of hanging in there. So I think that the fact that the financials are validating that, I think that's a good thing.
You think higher interest rates are bad for banks?
Oh, I don't know. It's like I look at the charts. I don't try to figure it all out.
We're ever going to get higher interest rates. It's like what Hills and Rand said yesterday. I mean, really, are rates ever going to go up? I mean, you're going to have to see some rapid inflation before the Fed really bumps up interest rates and wants to ruin the party here in the market.
Yeah, and that's good. I think that might be the problem, is that someday it's going to end badly. But you can't sit around and doom and gloom and worry about that. You just have to take things one day at a time. But it seems like I think everybody's grown comfortable with 0% interest rates, and someday that will end. I've been around long enough, and so have you. You've seen much higher rates than we have now.
Right.
I remember when they used to be the prime rate, when everybody focused on that. I remember the prime was over 20-something%. So they do go up and they do go down. But for now, they're still low. So let's not worry about them too much unless we have to.
I know you focus a lot on trader discipline and the mechanics of trading. What do you think is one of the biggest mistakes that new traders or people new to the market make?
Well, I think they think that experts like us know everything, and the fact is we don't. We take an educated guess, and we're willing to admit that we're wrong and move on. I think that's the biggest problem. Everybody seems to go on this holy grail hunt And the reality is, once you realize that if you just keep it simple and follow along, believe in what you see and not in what you believe, I think you'll do just fine. And one other thing I often preach is that money management will cure a multitude of sins. So if you're trading at a very small size, it's very easy to plan that trade and then follow that plan. If you're trading at a bigger size where it could affect your lifestyle, then the emotions creep into the trade and you end up doing the wrong thing.
And are you active in the pre-market or after-hours trading?
No, usually not. Occasionally, if I'm fortunate enough and get into a stock and there's some huge news overnight and it gaps, it's just up sharply overnight, I won't look that gift horse in the mouth, and I'll take partial profits in after-hours trading. But that's a fairly rare situation. For the most part, I only trade during the day session.
Are you real active? Are you putting orders in, before the open, trying to catch some efficiencies, or do you like to wait the market to open up and trade a little bit before you jump in, or do you just simply wait for your levels to come into play?
Well, what will happen is I'll actually get triggers on the open. I'm not necessarily putting that order in before the open because some bad things can happen when you do that. But I'm okay with actually buying on the open. I know some people don't like to trade around the open, but sometimes you'll get your biggest move on the open, and then that's it for the day. So I'm willing to go in on the open. I know some people call it amateur hour, but if you're trying to position trade and the position presents itself, then I think you have to take the trade. So I'll take the trade shortly after the open, as long as it doesn't gap against me or whatever. Once I get a trigger, I'll go ahead and take the trade, whether it's within the first minute of trading or the last minute of trading during the trading day.
And how many will you typically put on, or will you have on intraday? How many?
It all depends. Sometimes I think we went through all of July when the market got choppy and flat, and we had setups coming into every day, one or two setups coming in every day, and none of them actually triggered. So we actually ended up flat as far as new positions for the month. So if things are going really great, like if they're rip-roaring bull market like 1999 or something, we'll end up with quite a few positions on, maybe as many as 10 positions on. But when things get choppy like they were back in July and all, we'll only end up with a few positions left in the portfolio, and we'll just sit and wait for that trend to develop, and we'll wait for the setups.
Okay, and so also we got the Fed announcement today. Are you just something hands off on that, not trying to play into it, just have your stops and your targets out there, and if they happen to hit it during that announcement or the shenanigans that go on there, it's fine. You don't try, I assume everything that you're saying, you're not out there trying to chase or initiate new positions when
right.
News like
no,
that.
I think you could make yourself crazy. I think you could, if that's what you do, then do that and do it well and focus on that and spend all your time focused on that. But as far as trying to play that game in general, you're probably going to be right as much as you're going to be wrong, and I think it's a bad idea to try to play off these news events.
Okay.
I mean, if anything, maybe fade the news.
Yeah. Okay. Dave Landry, trader and founder at DaveLandry.com, giving us his take on the markets and his trading style, trying to get a little bit longer term perspective, which I think you really have to in these markets. Well, Dave, thanks a lot for coming on, and we hope to have you on again.
Thanks, Joel. I appreciate it.